Okay, hello everyone. This is another episode of the Normal Capital podcast. Today with me is a person known by the Twitter handler Nietzsche Capital. So, Nietzsche, why don't you introduce yourself a little bit to the listeners?
Yeah, I'm Niche Capital. I've been investing for around 5 years, and I've really fallen in love with it. It's my passion. It's everything. And always as a kid, I love to sort of kind of gamble, but more gamble based on like analytics and math and all that kind of stuff. So once I eventually found something I could do good at in the market, I just fell in love with it.
Sounds good. So, yeah, I wanted to first congratulate you on Applovin and Robinhood S&P inclusion. I believe those two names as of today are your two biggest positions, right?
Yes, yes, that was it. Friday was a huge day. Then Monday, I made a post on it. I actually made three times more in that day than I did in my whole account by the end of 2022. So it was something special.
Yeah, I've been following Uplovin. So I don't own Robinhood, but
Yeah.
I do own Uplovin, and I've been the shareholder for around 2 years. It was a headache. Like, every day you have a new short report, and you keep reading it, and like, well, Uplovin doesn't do what like Facebook is not doing. So like, why people are so mad at what the Uplovin like business structure is? And yeah, finally it got paid off, and I'm also glad it worked in the end.
Yeah, I don't really know why people hate AppLovin so much. I guess it's because it's just such a tough company to understand. Most people never really heard of it, and the stock moves up 700% or something
Mm.
in 1 year, maybe even more it was. And these short reporters saw an opportunity to just take advantage of a company people didn't really understand. And they obviously it all seemed coordinated as they all got together. I remember on one day there was like three of them at one time, and the stock got
Yeah,
halted.
exactly. Like I never seen a situation when like
$100
three
billion
different.
stock getting halted. I still remember it to this day. And obviously they did a good job in creating fear and taking it seemed like the shareholders, a lot of them didn't know what they were owning either, otherwise they wouldn't have sold. So just trying to create a lot of fear in a company that people didn't really understand was I think what they were trying to do. Nothing too much in the reports, and of the stuff in it, if I vaguely remember, a lot of it, like data tracking and all that kind of stuff, is Meta, and all the big tech does that. So I don't really see anything that bad in it.
Exactly. Same here. Uh, yeah, the first question I had in mind is, can you share how did you come up with this name, Nietzsche Capital? I'm not sure if it's re related to, like, I know who Nietzsche is, but Nietzsche Capital, like, can you elaborate? Why did you come up with this name?
I had a feeling you were going to ask this. I don't know. One day, I just my close friend, he's a very smart guy. He's a big philosopher, and I I just kind of like the name. Thought like investing's a lot of philosophy, niche like niche market, like stuff like that. And I just thought it'd be a cooler name to put than my old name, which was not as cool.
Okay, fair enough.
Yeah,
And
nothing really too big in it. It's just kind of.
it was so before the podcast, I've been practicing a little bit on how to pronounce it. It's a really hard German, like I believe it's a German philosopher, right?
Yes, yeah.
It's re really hard to not butcher his name.
The joke among my friend is I don't even read niche, and he's the one reading him, and I have it as my Twitter name, but I don't read anything about it, and that's the
Oh,
funny part of the group. So I
well,
don't really know it too well either.
you're not alone here. So, can you tell a little bit about your background, like what's your education is, and how did you first come up with investing? I'm just curious if it's something that you are studying in the university or something.
So I went to school 2018 to University of Massachusetts as
Hmm.
an econ major, and this time I wasn't really in the markets. I joined a fraternity, and I had a little too much fun, so I ended up coming back home, and I became a tennis pro then. So I did that for a couple of years, and then it wasn't until COVID when everything got shut down. So then,
Hmm.
there's nothing you could really do. And I always had a love, as I was saying, for like gambling and analytics and all this. And my dad, he's not an investor, but he S&P and P, and he understands it, like investing and how important it is. So I kept begging him, like, "Hey, Dad, please, like, set me up with a Fidelity account. Like, help me out here. Let's get this going." And then I finally in 2020, he did that. So that's really how I got my start in it. And obviously with COVID, you had a lot of free time, so I really spent a lot of time trying to learn about everything.
Hmm. So you start investing after the COVID crash or before?
Um, a, a little. I actually kind of caught the bottom around. I think it was April, March 31st, early April. I invested, but the
Hmm.
funny thing is, I caught the bottom, but I was losing money because
Oh,
it was new as. I got it at the best time, but somehow I still managed to lose money. I remember I was celebrating investing in like United Airlines at the time.
okay.
It was, learning and getting and investing, doing it all, trying at the same time. But at the beginning, it was not very good, even in a good market.
It is funny because I started investing around the same time, and I probably did a similar mistake as you did because so I'm from Canada,
Hmm.
and there is this huge monopoly in Canada called Air Canada. Is basically the biggest like airplane provider in Canada. The stock was crashed during the COVID, and all of my friends were like, "Hey, you have to buy it. You have to buy it. It will recover. It will be like 100% opportunity." At the time, I didn't even know like what stock market is. I just invested into Air Canada, and after how much 3 years, I was still down like 20%.
Uh-huh.
After the 3 years, I like understood how to read the financial, how to understand what like actually company is actually doing. I checked that even before COVID, they were not profitable. And I was like, what the hell should change so that Air Canada will finally become profitable? I just sold my position, and yeah, 3 years total return minus 20%, but it was a good opportunity to learn that you shouldn't just blindly hear what people are saying and you need to do your homework.
Probably make better, learn more from the bad decisions than the good ones, right?
Exactly, exactly, yes. So yeah, it's interesting. We started around the same time. And can you tell a bit how did you, like when you just started, what was your process of choosing the companies and how did it evolve during the time?
When I first, I don't even know how I just, maybe just names I've heard, kind of. It was a little bit back. I do remember the first time I had an actual kind of like plan. And honestly, it might have been funny if I stuck to that plan. I might have been better off now, even though all the success I had, I might have been better just sticking to that plan. But I originally had seen Tesla make an insane
Hmm.
run. And, everyone knew this is crazy overvalued. This doesn't make sense. And I thought, like, why is Tesla going up? And earnings were better at the time. That made sense. But I realized it was more due to the cult like shareholders,
Hmm.
the narrative and stuff like that. So I was like, I've kind of missed Tesla. It's already gone up like 10x in 1 year. What's the next Tesla? And I laid it on Palantir.
Hmm.
So for the next, I think it was maybe from like 2021 to 2023, every single paycheck I had from teaching tennis, I put into Palantir
That's a smart decision.
because I knew it was a great product. It was a great the cult was building, and they could pump that product really well. I
Hmm.
just knew that about it, and I loved it. Alex Karp, he was a great CEO, great visionary. So that's what I did with all my money for the and I got crushed. The market kept tanking,
Hmm.
2022 or whatever when it was. But every penny I would just keep putting in there. And one of the biggest mistakes I've ever made, and I've made a lot of these, is I remember when they finally reported gap profitability and the stock went up 100% in a month.
Hmm.
And my emotions were just going crazy because I'd never witnessed making that much money in that short of a time. I'd been losing so much. And I finally like broke even by like 20 or 30%, and I like sold everything. I, you
Hmm.
know, and I just remember that. And then, yeah, that from there, I started to learn more about like free cash flow, enterprise value, revenue growth, more of the actual like old school financial terms, like owning a business, more of
Hmm.
that rather than kind of like cults and stuff like that. So I tried to, it was good because then I got to combine both, which is kind of my strategy now.
So you didn't learn those things in university, right? You were doing it yourself.
I was doing it myself, yes. Fully self. I've not learned one thing from school that I've applied to my market knowledge.
Hmm. And back in the day when when you start investing in Palantir, did you know what they are doing, or you just try to find another like a cool style stock?
I sort of like I didn't fully understand it because IQ wise, I'm not like the smartest in the room. I don't understand a lot of things, but I understood they had a complicated product, but it made their clients a lot of money and it helped
Hmm.
them. And they hired the people working for them were the smartest people. So I feel like if you have the smartest people working for you and your product is you're charging a lot, great margins, and it really helps your customer, I feel like that's going to succeed. And the revenue growth was really good at the time too, and the cult was obviously a huge part. So just a lot of things added up. I wouldn't say I like completely understood everything about the product.
Okay, fair enough. I'm just curious what happened next. So you went break even with the Palantir, you are up like 20%, you sold it. You probably still regret that you sold, right?
Yeah, yeah. I mean, just crunching that is crazy what the that stock has done. But then from there, yeah, I started learning more. I got so lucky. I've had so many lucky breaks. I remember I think it was winter of 2020, no, summer of 2023 or something. I actually was like short Apple and TTD. I was reading all the bear posts, how inflation's going to rise, it's going to cause the market to tank. So I shorted like all those companies, and this, basically like a huge part of my port was short.
Mhm.
It by the end of when the market was starting to rise again, but then it didn't. So I shorted those companies, and then I found this guy's page, Bicker and Brittle, I think his name is on Twitter,
Mhm.
and he talked a lot about how fiscal stimulus, fiscal impulse was going to send the markets higher. And all his posts about this S&P going to 6,000, whatever, really clicked to me that this the crypto guys and the fiscal and the government spending recklessly is going to do more for the stock market than inflation rising a little. So I
Mhm.
quickly changed my strategy and I started to look for similar time kind of plays like Palantir, but more earnings based. And I found myself on Hims and Hers, which
Oh,
I
nice.
I
I
think
didn't know you were invested in Hims and Hers.
oh yeah, that was a huge play for me. Around $8.80 in November. So I made them my number one position. I mean, I think it was less than one times EV to sales at the time, and they were growing like 70%.
Hmm.
And the management was great too. So luckily, I've always found great management.
Are you, do you still hold Hims and Hers, or did you sold it or trim
No,
it?
I didn't. They were always one of my biggest plays leading into the year. They were actually my biggest play early in the year, and I keep making this. Finally, I've learned, but I keep making the same mistake when stock rises too much. I get a little emotional and I sell. So I was playing hymns in and out, doing well with all the GLP-1 nonsense, but then I eventually made a mistake, sold it like 45 or 40
Hmm.
or something like that, and I didn't really end up getting back in, just here and there a little bit.
Well, he didn't lose much. I think it rise till 70 and dropped back to like low 40s. I believe today it's like 43 or 45.
Yes, I'm like I do wish I had held until they announced GLP-1s were officially over, and then that I would have definitely sold. But I wish I would have held a little longer.
Like Hims and Hers used to be my biggest position for like almost 2 years.
Yeah.
So I bought around probably like $12. And for me, because I'm in Canada, it was really hard to understand like what's their value proposition because at that time, well, I believe still this day they are only in US. So I
Hmm.
only had to rely on what people like the real customer are saying, like how good their products are. And my main concern was, well, the Amazon are is doing exactly the same thing. But looking at people, how they like the packages, how they like the quick delivery, I was like, okay, I'm sold. I have to invest here. So yeah, it used to be my biggest position for 2 years. And
Hmm.
as soon as this litigation with Novo Nordisk started, or I would say not started, I got a little bit scared. So I sold all of my positions around like 65. And
Wow.
yeah, I re-entered back at the low
Great timing.
40s. Yeah. I'm not planning to make it my biggest position now, so I just re-entered it at like 40s, make it 2% of my position because I still believe the CEO is great and the value proposition is good and people like the packaging.
Best in class. Yep.
Yeah. Oh, interesting. Yeah, really a lot of common stocks that you own and I do. Uh,
I'm
I,
sure we go through it. Yeah, definitely.
uh, yeah, I think. what I was really curious about is, can you tell a bit about how did you find Applovin and what made you to make it one of your biggest position?
I remember actually I was walking into a Dunkin' Donuts,
Hmm.
and Shai Balor made a post with all the companies and all their valuations. He was never even an investor in AppLovin. He was big into TTD or something. I don't know why he never got into AppLovin, but it was
Which year this?
Shai Balor, Shai
No, no,
Balor.
I mean like what year was it?
Was this 2024? I think this was 2024 in March.
Okay.
I'm pretty sure that's what the stock was around $60. It was
Wow.
either 60 or 80 when I first got in.
Hmm.
I think it might have been, yeah, I think it was 60.
Hmm.
I'll have to recheck that. I think it was 60. And then I saw this post and it was like apps trading at like 10 times free cash flow with one of their businesses growing like 60% or something.
Hmm.
And so once I saw that, I'm like, and they'd grown a lot too, but I realized their valuation is still like 20 times cheaper than TTD or
Hmm.
Palantir or any other software company. I'm like, what is going on here? I don't care. I have to get a position in this as everything I like, high growth tech company with great margins and super cheap free cash flow multiple. You never see that. So I remember seeing that. I'm like, I got to make this a huge part of my portfolio. And then I just kept learning more about them. And Adam is obviously incredible. And just listening to his earnings calls, I've never gotten goosebumps before. Only listening to his earnings calls have I gotten goosebumps.
And so you hold since Applovin was around $60 till today, right?
I did not like again. I make the same mistake. I had more at that time, and then as the stock's going up, I'm starting to sell some. I'm panicking a little bit. Same recurring mistake. So I sold them on the way up. I eventually had liquidated around when the short reports happened and all the nonsense. I
Hmm.
forgot where I decided to. There's too much nonsense going on right now. I trusted the company, but I knew AppLovin, as I tweeted, it trades like a cryptocurrency. It doesn't trade on fundamentals or anything. It trades on buys and sells and people's emotions. So I had a
Hmm.
feeling AppLovin was not going to perform well in the short term. So I actually had gotten out until I think I sold like February or March, and then I got back in. I don't know, like 2 or 3 months later. Then I really started scaling up big again as they kept talking about how big e-commerce was going to be.
Hmm.
So it
And
wasn't like a full linear path of just holding the whole way and the same amount. So there were, but happy with how I've traded it this year. This year I've traded very well.
this year was really good for Applovin,
Yeah.
especially with this S&P inclusion last week. Are you planning to hold it longer, or you think that once it's already in S&P, the market cap is already big, so and you better reallocate it to some other names?
But most of the time, actually, I think you see with an S&P inclusion, it's like buy the rumor, sell the news, the stock
Hmm.
sells off. But as I've tweeted about before with AppLovin, I really think this is a changing point because if you ask 100 investors out there who knows AppLovin, what do they do? 99 of them will say they have no clue. It's a fraud. The numbers look too good to be.
Hmm.
Who know it even will say the numbers look too good to be true. This is too risky. I'm not going to do it. But now that they're part of the S&P, people are saying, well, I don't know if this can be a fraud if the S&P, the biggest index fund, has allowed them in. So now you're going to start to get more kind of I don't know, older school conservative type investors saying this may actually be a real company. So I
Hmm.
expect that to be a huge catalyst going forward. A lot more additional investors, and now I mean we have Q4 coming up. Is they're opening up the platform international. They're opening it up to um, tons more users. I mean, not everyone until Q1 and Q2 of next year, but I think they could be growing at least 20% quarter over quarter from Q3 to Q4. So I really think this is the best the company's ever been. It's just starting right now. But
Hmm.
I think either 55% or 60% in AppLovin right now portfolio. Around
Wow.
yeah, around 600 to 650. I'm thinking about trimming 20 to 30%, and then
Hmm.
holding the rest till around 1,000, maybe a little higher.
Wow, it's a really good like allocation. I wish I could have a courage to do something like this. I'm always scared, even if I spend like 100 hours researching one company, I still can't make it bigger than like 10% of my allocation. I'm just scared. Like there are always a thing that I don't know that I don't know.
That no, that's totally. It's just with Adam. He's the best CEO I've listened to. I mean, he's incredible, and I feel like a lot of these CEOs they have like 80-90% of their money in the company, maybe even more. So I said, if a great CEO like Adam could have that amount of money in this company, he's that great. I trust putting this much of my money in it.
Hmm. Do you know by any chance what are the like latest news related to the TikTok in US? I know Adam put a blog post saying that Applovin will be like if Applovin acquires TikTok, it would be really great for a company. But it was, I believe, on March this year, and since then I didn't hear any news from Applovin related to the TikTok acquisition.
No, I honestly have not heard anything either about that. I do not think they get it. I don't have my hopes up it for it at all. I don't really care too much if they get it or not. So I've not placed that much emphasis on that. I think the company's going to do incredible with or without it.
Hmm.
But yeah, I haven't heard anything.
I think when was it? I think the first time I heard about Applovin was the end of 2024. And the first time I heard about from the Jonah Lupton, not sure if you know him.
Yeah, he's great. Yeah.
Yeah, he puts really good research. Like this day he doesn't do it anymore, but like few years ago he used to put like a good like, research on the companies on the Substack. So I read
Mhm.
about Applovin. I am a developer by work, and I was like, well, Unity does the same thing, but I'm not in the game development. So I asked around the people in the industry, and all of them were telling me like how bad the Unity SDK for advertisement is. And then I decided like, okay, I need to put at least like 5% into the plugin. But
Yeah.
I was scared to make it bigger because like what if one day Unity comes in and say, hey, all third-party ads, we will block them if you are building the game on top of our engine. So this was my like bear case. And yeah, without this, I would probably make uploading to be something like 20% of my position.
It's funny you mentioned that because Unity actually did try to do this
Oh,
2 years
really?
ago, and all the game developers like went on strike. So this actually became a huge cat, and they went to different game developers, indie games, I think something like that. So
Hmm.
Adam actually tweeted about this, and this became a huge catalyst for app after that
Hmm.
because now the game developers lost huge trust in Unity.
Hmm. Interesting. I somehow missed this point.
I'll have to send that to you. Yeah, but I remember that was a huge catalyst for app.
Okay. Oh, wow. So is it something like, and let me know if it's private, 60% is Applovin and the rest is Robinhood, right?
No, I gotta. Let me crunch right now. Hood is probably like 15%. 50.
Hmm.
Yeah, but Hood is not really, it's not an earnings play. It's a completely Tesla, Palantir, uh, like a SpaceX, ASTS kind of play. Nothing
Hmm.
to do with earnings, really. Very little to do. Applovin is much more due to the business and earnings. Hood, I'm playing the narrative on it. And I think it's the strongest risk reward narrative out there.
Hmm. To be honest, I never did like a deep dive into the Robinhood just because I don't believe in the business model of the brokers. And I'll give you an example. So right now in Canada, I am using three brokers at the same time.
Yeah.
Just because if one broker comes in, the new broker, and they tell me, hey, if you transfer money into us, we will do like 2% matching or 5% matching. So I'll transfer all the money from one broker to another. And then
That's
the
what I
old
did.
broker will
Yeah.
tell me like, hey, if you put money back, we will give you like this percent. And I just keep putting my money back and forth between brokers because like nowadays all of them are free. Like they don't charge you any transaction fees. And yeah, they're basically doing the same thing, right? Like there's the options, there's
Yeah.
buy, sell, and stocks. And I was like, well, there's a Robinhood, and I'm pretty much sure anyone can come in, do the same thing, and say, if you transfer money from Robinhood to us, we'll do some sort of matching. So yeah, I'm just curious, like, did you thought about this issue, or there's something like there's a really great value proposition of Robinhood that will like keep customers from going to other brokers?
It's funny you say that because that's why I move all my money from Fidelity to Robinhood because they
Oh,
offer, I think it was time. And I'm
hmm,
currently moving more money over because they're doing a 2% match. But
nice.
actually, the funny thing is, I don't, Robinhood is the only company doing this. I think a lot more companies should be doing this, but it seems like Robinhood's the only company that actually cares about the smaller person, and these
Hmm.
bigger companies just care about the bigger institutional investors and stuff like that. So Robinhood is stealing a lot of share from doing this, and they have smart rules where their new 2% matches, you got to hold it for 5 years, otherwise you lose that 2%. So
Hmm.
their payback economics are very strong. And the management's also very sharp here.
Hmm. And I'm not really sure. I
I
never
don't
look
know
at
if they do that in Canada.
in Canada it's something like I believe the whole period is around like a year, but Robinhood, I it's not in Canada as far as I remember. I never seen another advertisement locally. So we have our own sort of brokers.
Mhm.
And I'm just curious, do you know how they make money if all the transactions are free? Is it from the like holdings that you have on your spare cash, they just like rent it out and get some sort of the bond yield?
Well, there's that. There's margin. They have crypto where they take a take rate, uh,
Hmm.
all different sorts of like gambling stuff up now, options. And then from the equity side, which is actually not as big as you think, I'm pretty sure they give the info, the buy orders to like a market maker, and the market maker will give them part of the spread or something like that.
Hmm.
We're not actually, they're making money because we're not actually getting the best price when we try to buy or sell our stock. But it's so small, I don't really care too much.
Mm. So the spread is not like too much different from the real market price.
I don't think so, but that little spread is where they make their money.
Hmm. Okay. Do you plan to hold it for a longer period of time since it's already in S&P?
Uh, I got in at literally the best time. I remember it was like 28.95 on Sunday. I
Hmm.
got in then, so I got a hold on Sunday, the April during the April crash when it was tanking like 20%. I made it a big
Oh,
position.
yeah, I remember
So,
those days.
yeah, so I'm actually forced to hold because I'm gonna have a huge tax bill if I say this. So I'm gonna try to hold this for a year.
Okay. Yeah, it's the way the tax system works in America, right? The short-term capital gain.
Exactly. Otherwise, I probably would sell, and there's probably better opportunities out there. But I'm locked in here.
Hmm. Okay, yeah, fair enough.
Yeah.
There's another thing that is still in my portfolio, and I would say it's around 7% my allocation. The company is TransMedics.
Yeah.
And I believe you used to hold it and you sold it because of the seasonal Q3, right?
Yes, there was a lot of people spewing bear narratives on it, and I saw the price moving with it, and I probably should have gotten out earlier before and anticipated the Q3, but I didn't. I held, went back to 101. I added more than earnings were good on net income side. I remember, and it stock shooted up again. But it was weird. We have a Discord going on TMDX, and I'm close with a couple of guys, and we were just so shocked about how they only did 157 million in revenue that quarter, and we all were like, we were thinking they must have lost some share, and
Hmm.
then we were starting to see flights and DCD transplant numbers from Q3 come up, and we're like, if they lost share that quarter, and then flights are down 15% a month and a half in, I got to get out of this. So I
Hmm.
ended up getting out, I think, around like 125, and I've been pretty happy with that. Rotated that to Applovin.
Are you planning to buy the TransMedics back in the future after
Oh
like?
yeah, I mean, Waleed is a great company. Is great long term. I think they have a big moat, and but I just think there's going to be. I do think the DCD, there was like a new law that came out that's saying like if the person who died did cocaine or something, you can't use those organs, and RFK's
Hmm.
cracking down on that. I think that has played a part along with the seasonality. So I do think Q3 will definitely be much weaker than people expect, and you know how a little weakness, the stock market reacts. I mean, you saw it with TMDX last year.
Yeah.
So I do think I'm going to be able to get in at a good price, and I think from Q4 with trials starting up and just expanding into new things, it's going to be a great stock, and I'm sure it'll be over 200 next year. So yeah, I will look to get back in, but
Okay.
just not until after Q3 or maybe like 1 month after.
Yeah, the last year was brutal. Like
Yeah.
when was it? I think the stock was around 170 and they announced Q3 and it went down till like 60 or 70. And me personally, I really believe in this product and I did like the number. I knew it's seasonal. So I was initially up around like 100%, erased all of my profits because it went down to 60 and started buying back again. And yeah,
Yeah.
I did like what CEO said around 2 days ago that the this quarter won't be as seasonal as people are anticipating. And I believe he bought like 2 million worth of shares like a month ago at one, I think at 112 as far as I remember. So yeah, I really believe in this team, in the product and like a business proposition and what they are doing like in general.
Mhm. No, yeah, long term, I think this company is great. It's I really like the way Walid speaks and he's so knowledgeable. No
Yep.
doubt about it. It's a winner.
Okay. Yeah, so far we talk about the company that probably most of the people know, like Applovin, Robinhood, Palantir. There is one which is kind of small, and I do believe like many people have never heard of it. So Fluence Energy. Can you tell me like how did you find it? How did you like start this like, be putting the dive deep into what the company is doing? Like why Fluence Energy like in particular?
I remember it was the stock I was following it. I always had it on my screener because it was trading at like 0.5 times multiple or something, the cheapest. It basically price to sales it's been ever in the company, and management was talking about like 40% revenue growth this year and 30% next year, and then 30% longer term on top of that. And it was trading at like a super cheap multiple. And I saw other energy stocks trading way higher multiples. So that piqued my interest. I didn't end up starting a position then because there was some short report on it with like the SEC reviewing their accounting, and I didn't want to
Mhm.
get involved.
But so my thought is this is a name that most retail investors never heard of, right? So if you say like something like Tesla, everyone like, yeah, I know Tesla. But Fluence Energy, the business model is kind of unique. It's not like a software stock. How did you put it in your screener in the first place?
I, I don't. I just think it's just on Koifin. I was just playing around with some like high revenue, which
Hmm.
companies are growing the most, and it popped up and at the super cheap multiple. So that's kind of how I found it. I knew it wasn't discovered. It was completely against my investment
Hmm.
strategy. So I knew I needed something big to happen to decide to get in. And I don't know if people probably don't know, but the way they guide and stuff, and what they changed their guide by a little bit, or I think it was more than a little, and the stock dropped like 60% in one day.
Yeah, can you elaborate more about this? Like, what happened?
I
Why
don't
the
remember
stock
what
was
it
down? Mhm.
they because there was here it was because there was three Australian contracts that they didn't
Mhm.
sign and it needed to get pushed to the next year. They changed their guide by like 10 or 15%, and that caused the stock to drop 50%. And I'm like, stock's already cheap. It's been selling off the whole time. Now it drops another 50%. I'm not them losing contracts, but them pushing contracts to another year. This seems like an incredible entry point. So that was around like 670. 680 is when I kind of originally made my initial entry point. And it was just kind of like a fun small position because I like to think my memes and are more systematic and more guaranteed than kind of investing based on earnings without the backing of a cult. So I just made it a small, like fun time position.
For those who don't know, can you explain like what their business model is?
Yeah, they like a battery energy storage system company. So they store batteries and energy. So it's kind of like the new way of storing power.
Hmm. And so I believe you said they had some contract with some companies in Australia. Those contracts to bring those solar energy stuff were just postponed till like 1 year in 2026, right?
Yeah, and they actually just signed those contracts. So yeah, I trusted the management on that stuff. And they're one of the biggest plays in the market too. I'm
Hmm.
pretty sure they're second or third in an industry that's growing. People are saying if you look it up, 30% for the next 10 years. So there's a lot to find fascinating about the battery energy storage system market, which personally I don't know too well, but I know the numbers. Like you find an industry growing 30% for the next 10 years, that's going to pique my interest. Something's got to be. There's a reason it's causing that much demand.
I believe this backlog is bigger there than their current market cap. Is it correct?
Yeah, their backlog is like 5 billion, 5.1, and their market cap's like 1.3 billion. So this is
Wow, that's a really big mismatch.
once this and this one I feel like I will be able to time, so it's going to be fun. And we may have to wait either this quarter or one more. But once the story starts to look better, and because this year was so bad, and next year they have pushed out all the contracts, it's going to start to look really good. I think you're going to get some crazy gains in Fluence Energy coming up.
Why do you think this drop happened? So like everyone can go to their financial and see that the backlog is basically booked, right? Maybe
Yeah.
market doesn't believe that they will execute it or something.
I don't know. I guess the market and these algos just on a big miss, they just sell it off. And then once you have no momentum, no one wants to buy and no one's heard of this name. So there was some profitability concerns then with this. The market just seems not to be very rational these days.
Maybe it's also the case that the company is really small and just like I don't know. Correct me if I'm wrong. If there are any analysts that are covering this company already.
There actually are, but yeah, on like Twitter and stuff like that, and I'm sure among most retail investors, yeah, people have not heard of them.
Okay. Yeah, I don't own it, but I read your deep dive and yeah, I got curious why is the backlog is so big, but the market cap is like two, three times smaller. There might must be some mismatch that I'm missing, but yeah, probably worth to do a little bit more research from my
Well,
side.
I mean, there's sort of the margins are it's a very low margin business. I'm pretty sure around like 10 to 12% gross margins.
Hmm.
I mean, you shouldn't expect crazy multiple, but the multiples, if you ask me, should definitely be much higher. And
Yeah,
the
of
market
course.
is not discounting future growth on this company.
Yeah, coming from Applovin, when you see that just 10% margin, it's like no, it doesn't work it.
I do wish Adam was managing Fluent Energy too.
Exactly.
That would be the two companies. That would be 50% of my portfolio.
Interesting. So from the conversation, it sounds like you are more of the like fundamental investor, right? You read the financial, you look at the management, like whether the management trustworthy. Do you do any sort of trading?
I actually like to trade around the positions I own because I should probably expand my skills a little bit and you could make a lot of money, but I need to feel confident in the company that's not going to go bankrupt tomorrow or something could
Hmm.
happen. So what I love to do is, and I'm so addicted to staring at the screen, it's probably horrible, but I feel like I only own three or four stocks. I feel like I know how they trade so well. I remember in the summer this year, Applovin was getting no bids; they were shorting it, and I just kind of know when to get in. So I really like watch these companies every day, every hour, and I know all the catalysts coming up, and I just know how it trades. So I will just like for the S&P, I went in huge for double leveraged Applovin shares. I just had a good feeling they were going to get in. I
Hmm.
remember when on earnings it pulled back to 353, 343, and I doubled my position. I knew that those earnings were way too good for the market reaction. They're just trying to scare off weak hands. So I really know how AppLovin trades, earnings, catalysts all around because I follow basically every minute the stock price. So just around the positions I own.
So you basically trade only the stocks that you own, but you don't look
Yeah.
at any indicators, right? You just know that historically, if Applovin like drops this percent, then after like few days it will recover by this number of percentage.
Yeah, or just kind of like a feel. Like I know if AppLovin beats by this number and this number that the stock's eventually going to get bought up once people like realize the numbers that they just put up.
Hmm.
And I've just been around the company for so long that the last couple of earnings, they always send it down 10, 15% just to shake people out no matter what. So I just kind of knew that. And I always have like scenarios in my head with if they do this, I'll get in. If they don't do this, I may sell. So just kind of be like following the company for so long. I know the how the shareholders react to it.
Hmm. Interesting. Do you
Yeah.
do any options?
I did options like when I kind of first got started, I did really bad. And not really, to be honest. If I'll
Hmm.
do some leverage, I'll do double leverage shares.
Hmm.
But maybe I kind of do wish I did options because I would be in a real good spot with some of these companies. But no, not really any options.
Okay. So interesting. Yeah. So all of your gains are coming from buying and holding stock for, I
Yeah.
wouldn't say like long period of time, but like year or 2 years.
Yeah, I'd say I'm more like six months around that time period. And I've been getting good at timing these things, so I haven't really been holding for a year. I kind of wish I could because for tax reasons, but yeah, more like uh
Hmm.
six, 3 to 6 months kind of time period
Hmm.
is when I try
Interesting.
to time the catalyst coming up.
Do you have any like stocks on your radar that you are doing the research on?
The thing is, right now, no company's really cheap on earnings, so it's going to
Hmm.
be for me. It's much more catalyst driven right now. Enbis, I'm mad. I panic sold them 47 a while back. That still hurts me. I still like them. They have a good cult following. Iron, another one. I've always followed.
Oh, yeah.
You know, PSIX. I'm interested in. I'm interested in TSSI, TGen. So I'm trying to get like more of an AI kind of
Some.
narrative play, at least
Mm,
10% of the port. I'm going to try to maybe split between those three because I don't, there's some risks involved with all of them. So I don't really know. And I only want to go in big if the company I kind of understand the management and the product, you know?
some data center exposure.
Yeah, but I do think that's going to do really well. And like PSIX is very cheap multiple.
It might, yes. I'm not sure if you had a chance to look at the latest Oracle quarter. It was fantastic. So they basically confirmed the backlog till, as far as I remember, 2029. So demand for data center is huge.
Oh yeah, and that would be great because that's going to lift all the high beta stocks. But yeah, that was an insane earnings by Oracle.
Yeah. I still regret selling Nebius. So I bought it around $16,
Yeah.
and a few months ago there was a news that Nebius is doing the convertible notes for like $1 billion, and the
Mhm.
market cap at the time it was like, I don't know, 3 billion. And I was like, I still like the company. I still like the ClickHouse. So they do have the 33% of the ClickHouse stake. I use this
Mhm.
product daily. And I was like, well, there probably would be some sort of the market reaction, and I can re-enter like, in a cheaper. And I never got an opportunity. It kept going up. And like yesterday or 2 days ago, there was this news with Microsoft putting like, I don't remember, $20 billion into their data centers, and the stock went up like 30-40%. And I'm like, wow, why did I do it?
I was so mad when I saw, and I had such a good day too. And then I thought it was a glitch when I saw
Yeah,
those. Yeah, but you know, you gotta. I'm trying to move forward and looking for the next play. Right, we can't hold ourselves on the ones we missed.
exactly. Do you have any opinion about crypto? Maybe you have an exposure, then like what's your general thoughts?
I look at kind of Hood as my crypto exposure, and I love the crypto guys because I feel like they fully understand the macro more than Harvard economics guy understands the macro. They understand the money printing and inflation and just the value proposition of Bitcoin. So I do like crypto, and it's more kind of do with timing cycles, kind of what I do with the market. But right now, more just stocks interest me more with earnings and knowing a business. But
Hmm.
I am very pro crypto and I like it.
Okay, but you don't hold any, right? You just have
It's
the
directly
Robinhood.
to profit consider sort of crypto.
Okay, fair enough. Do you have any opinion about those companies that issue more stocks to kind of buy Bitcoin or Ethereum and hold it in their balance sheet?
That's a good one. I am interested in BMNR. It's
Mm,
just, and I should be able to pull the trigger. I'm just getting conservative, but I do think that company's going to do very well. They have a strong narrative. Tom Lee's great, and I got a really close crypto friend who's done very well in the crypto markets, and he's very bullish on them. So I trust him completely. So that one is also on my radar too. It's just about pulling the trigger on a company that style wise, those companies I don't really like understand that well or believe, you know.
mhm.
But I know in the short term, I'm pretty sure they're going to do well.
Okay. Yeah. Uh, Outside of your investment, so I'm just curious, like, do you have any hobbies? What are you interested in outside of the like looking at the screen, trading, buying new stocks? So you said you are teaching tennis, right?
I used to be, and I
Okay.
I quit that because I did well in the stocks. and I wanted to do just more kind of focus on that. But yeah,
So
what were you?
basically the trading and investing is your like full-time job right now.
Yes, along with being in school, but yeah.
Oh, interesting. It's a good job to have like after I'm not sure what time zone you are, but for me it's PST. 1 p.m. market is closed and you basically like, you're free to go, right? You don't have to do anything. You can look at the mistakes, you can look at the chart for tomorrow. There's no pressure.
Yeah, I'm Eastern, so it's also a good time. I can't complain.
Okay. Hmm. Uh, uh, are you planning to, so if you do it the full time, are you planning to do some sort of your own fund and like help other people to invest their money and like multiply them, or is just your own money, or maybe like a family money?
My goal, I want to try to get a Substack going. I make kind of a joke if I do 3 straight years of above 100% returns, I'm going to get a Substack role and a paid Substack. So I do try to want to get a Substack going next year, and I believe Substacks are the future. I think there's so much value proposition in them. I think I don't subscribe to them, but I don't know if people know story trading. I've been following them. They've done unbelievable. I think 550%. I mean, where can you get this value? I think there's certain accounts where you could get a lot of value by subscribing
Mhm.
to them. And it just seems like more and more people are going to be turning to Twitter for, we'll say, non-financial advice, and quick plays like that. So
Yeah, and
that's what I want to do. I think that's the future. And then I am also helping out friends and family. I have like so many people. That's the best thing when you help out your friends. Like my friends back home, they're all big into Applovin for this play, and we all made so much.
mhm.
We're all just so happy. So I help out a lot of friends and family.
I hope you get some sort of the management fees for them to enter the Applovin.
Actually, no, not really, but they know how to brighten up my mood when I'm in a tough mood. So that's all I ask from them. It's just happy to see them happy, and maybe we could all be retired in Europe pretty soon.
Hopefully. Yeah, I also noticed a lot of like smart people, they are moving to the paid subscription over to the Substack. So much great material was there. So back in the days, like 5 years ago, everything I found was through the Seeking Alpha, but the quality dropped so much, and it's basically like it's just a copy paste, the same post that posted by other people that just tell you the financial, like, hey, this is trading at this P, there is so much cash, there is so much liability. And I read it and like, so what? Like, I didn't get what the company is doing, like who the management are. And if I want to learn more, there are so many great resources on Substack, but I have to subscribe to like to read it.
Yeah, yeah, I do think that I've seen Seeking Alpha too, and it just seems like lower tier work, and
Hmm.
can't talk to the person, and you don't know the people's returns. I'm not a fan of it. And I think Substacks, because so many people could do it, you could charge a cheaper price, and you can end up get a Discord going, talking to the people on Zoom, one-to-one questions, stuff like that. I really
Hmm.
think it's so easy to get started. A fund takes forever. To me that seems like the future, and there's a lot of great people out there who either have been on Wall Street or maybe are younger, but they kind of understand what's going on, who are turning to the Substacks. So there's a lot of great value out there if you could find it.
Hmm. Okay. Yeah, interesting. Uh, yeah, I think it was almost an hour. Before we go, I tried to ask the guest if they have some sort of the book recommendations or the latest movies they like to recommend to other people. Is there anything like this that you want to share?
I never actually read any books on this. Most of my learnings have come from Twitter. So I'm
Hmm.
I'm fully a Twitter, but maybe for some funny stock movie, Wolf of Wall Street's feel great for you got, Big Short. I love and Margin Call. I mean, I'll always throw those whenever those are on. I'm watching. Those are great.
I
So
think
those,
it took me 4 times to rewatch Big Short to finally understand what the hell happened in 2008. I didn't get it. Like first time, like what happened? The second time, like no, I still don't understand it. And then I did some YouTube videos on explanation, and then I rewatched the third time, like oh, okay, now it makes sense.
yeah, yeah. I probably have to rewatch it again too. Maybe it'll make a little more sense.
Okay, so yeah, thank you everyone. Thanks, Nietzsche Capital, for joining the podcast. It was really interesting to hear your perspective. Anything you wanna say before we go?
I just this is my first podcast, so go easy on me, guys, if it wasn't great, but it was really great. I really appreciate you having me on, and I hope to do more podcasts like these in the future. I think it's really cool to get your thoughts out into voice and just it's kind of a new way of learning, you know. So just very happy to be invited on. Thanks so much.